The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, boys and girls, it's time for the little buckaroos to wake up and move on to the selling side of the market. I'm going to put the chart of what happened back in the old days of March the 9th of 2009. That was 2 days before the new moon. And as you can see, we had a big ABCD pattern down there. We had a 3 drive to a bottom pattern there. And we also had the Bradley model just getting ready to change direction. Now, if we take a look at something, what's been happening recently, and we'll put up the Dow Jones, you're going to see the exact same chart, almost exactly, I mean really almost exactly, but it's upside down. Instead of making a bottom, it's making a top. And here we have the lunar eclipse today, coming in at 2:19 Eastern time. I don't think there'll be anything exact at that time, but it should be within a day. We have a big outlier event today. The Dow's been up 8 days in a row, opening higher today. Whether it stays higher, we'll have to see if not really, Marshall, not really. Marshall is commenting that I'm very brave to make that comment. Well, when you see something, you know, you folks, you know, this was 10 years ago, well, 8 years ago when we had that bottom, but those of you that were around that time, that was my second, so I started doing the TFNN back in 07, and that was the day what I said in the letter that day, it was going to be the biggest rally, short covering rally that the stock market had ever seen, exceeding the rally of 1938. That was after the Dow had hit 42 back in July of 1932. It went a little bit higher than that, of course, but this is really big, folks. This is something that is you're not going to see this very often. It's going to be very, very interesting, you know, to watch it. Here's what this thing looks like if it were upside down. It's a little, the chart's off a little bit, but you'll be able to see what I'm talking about. This is just the Bradley model's not right a lot, and it's not wrong a lot. It's, you know, it's about 65-70%. But when it lines up like this, you got to pay attention to it. You know, that's basically the bottom line from my opinion. So just watch it very closely. We do have this lunar eclipse followed by the 21st of August, which will be the solar eclipse, and that will be a very interesting, you know, chart to you know, watch also. The Elliott Wave theorists came out this past week with their weekly letter, and there's some really great charts in there. And he is reiterated different types of stuff than what I'm looking at. He's looking at things a whole lot longer than I am. I'm looking at, you know, just the Bradley model and the daily and the weekly charts on these things. That's really what I'm looking at. He goes back about 17 years, and I'll just put this one chart up. If you do get the letter, you'll be interested to see some of these charts, but that's what we're looking at. So I'm not sure about some of this longer term stuff. All I do is I know short term, boy, this is where you where the pedal reaches the metal, you know, like I said in the letter, rise and shine, little buckaroos. We've got places to go and things to do, and this is basically the time to do it. All it needs for this market to turn down is the Dow to move down 150 points, and believe me, you know, being this many days up, you know, that's a really big deal. That's what they're talking about. But folks, look at this. Look at this chart here. I want to show you what's really happening in the market. You know, from what they're telling us and what's going on. This is the Dow Jones Industrial Average compared to the VIX index. Look at this, folks. The Dow has been going straight up since July the 8th, and the VIX index hasn't even made new lows but once. And that's holding really well over the last 6 days. This is a really, really important, because when a market does not go down on a bearish move, it only has one way to go up. And that's basically, what you're watching. Bloomberg posted a interesting chart this weekend about the seasonality of the VIX index, and as you can see, we're over a very strong seasonal pattern. That seasonal pattern is from 1990 to 2016. So, not counting all the patterns that are completed that we've been talking about all this time, but this is really interesting timing stuff that we have coming in here, and especially with this new full moon and solar eclipse today, lunar eclipse today. So those are things that are important. But let me show you one that really is an outlier event, and this is what's been happening to the E-mini S&P for this market. You'll take a look here. You'll be able to see it right there. You'll see over the last 8 days, we've been trading within 1.75 of the previous day's close, 8 days in a row. That has never happened since they started trading the Dow E-mini, which was back in April of 1982. I happened to be in there the day that it started. I believe it was April the 16th. And it was really interesting to see that we are in this tight range. You can see what the Dow has done here. And the Dow has done that because of what? Three stocks: Boeing Airlines, McDonald's, and Mr. Apple. So those are the ones that are making these things jump this much. But this is it, folks. I tell you, I don't even think I'm putting my this is just about as low as risk trade you'll ever see if you're ever going to trade, in my opinion. It might be wrong, and if the Dow moves up a couple hundred points from here, it would certainly be wrong. But if it starts down today, that's it. Yep, the Dow never goes down. I did get the memo, but I sent the memo back to the folks, so we'll see. The Bollinger Bands are extended in the Dow, but that's mainly because of the three stocks, folks. That's basically it. Look at the IWM. I mean, this thing's been in a downtrend for quite some time, and it doesn't take much for this IWM to actually, give up the ghost, because it's going to be very interesting in here. But all the timing stuff is there. It's and the patterns are completed. In fact, the Dow is the only one that has been going nuts. The NASDAQ has been in a downtrend for going back about 2 weeks now. So it hasn't made new highs for a very long time. But that's neither here nor there. All of the Dow stocks that we look at have completed all the patterns that we're looking at. The only one that is just totally out of whack, of course, is Boeing Airlines. That's in a parabolic move. But all the others are, lined up, just about as clear as you can possibly get. One other thing is we did get a chart this past weekend from our good friend Kevin Murphy, who was one of the Ergonometry folks. And we'll put this up here. Now, I didn't factor this into the selling signal that I'm getting, is because mine is a little shorter term and it uses the Bradley model. And but boy, all these things are set up so clear. I mean, it's I tried to pick a few tops before. Sometimes they work, sometimes they don't. But boy, this one is about as clear as you can possibly get. But remember, sometimes it's as clear as mud, that's for sure. By the way, today our guest is going to be Dale Pinkert from ForexStopHunters.com out of the UK. And also on Tuesday, we're going to have Ed Carlson from the Seattle Market Technicians. Wednesday, I will not be here, folks. It's a travel day for the family, so I will not be here Wednesday. And we'll be right back, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, one of our listeners is in Lund, Sweden today, and they are sending a picture of this beautiful astrological clock that sits in the town hall, in the town square. As you can see, the top of it talks about it shows the lunar cycles, and then the bottom part of it shows the zodiac. And this is over 1,000 years old, but it's absolutely a work of art. So you can imagine the mechanical expertise it took to build this many years ago. So if you ever get to Lund, Sweden, you'll be able to see that. Anyway, let's move on to a couple other things that we want to talk about. Remember, we were mentioning the grain markets, and we're going to be a tiny bit higher today. I believe this is a time to be looking to possibly take the long side of the corn, wheat, or beans, whichever one you like to see. We have a little trade getting ready to go on in the in soybeans and also in the wheat markets. But these are ones that we'll have to wait and see if the market's going to fill us, because they are going to be up a little bit higher today, only about 3 cents, but that's neither here nor there. So the next thing someone's asked me, by the way, we will have Dale Pinkert of Forex Stop Hunters will be our guest here at the break, and then Tuesday will be Ed Carlson and Seattle Market Technicians. Wednesday's a travel date. Thursday we're going to have Bill Meridian of Cycles Research out of Vienna, Austria. And Friday, a special Shane Smolian of wolftrader.net will be on, and that'll be a really good show, also. So we got some nice guests coming up, which will be fun. I wanted to show you something that happened back on March the 5th of 2009. If you put this up here, you'll be able to see this is the transit charts that showed all the planets were lined up pretty much in the top part of the zodiac. That's a very, very unusual situation. That happened, at the same time we were looking at that pattern complete. The difference that we have this time is that we have all this activity going on in August, and here's what it looks like from the August the 7th, which is today when we have the lunar eclipse. You see they're all over the map, And that doesn't, I don't understand the meaning of why they're all over the map, but all I know is that means there's a lot of activity, which means we're most probably going to see a great deal of volatility in just about everything. That's basically, what I think is going to happen. Now, remember, that's just a probability. It's not a certainty. If we take a look at the Dow Jones Transportation Index here, you'll notice that this has been in a downtrend, since early July, and we haven't even had a dead cat bounce as of yet. We started one a couple days ago. We're going to see how much it continues, but the transportations are starting to roll over too. There's just a lot of things, that are giving some really important spots as far as pay really close attention in here, folks. It's interesting. The patterns are all lined up. The Bradley model is all lined up. The lunar things are lined up with the full moon. So you got to pay real close attention today. This is Mother God and country stuff, in my opinion, but we'll have to wait and see. Now, we've had a question about the crude oil market, folks. The crude oil has stopped at that 78% level. We got up to 49.72 last night. We still haven't broke through the 61% retracement on the daily chart, which comes in at 50.35. That was the high. That was the high from January of 2016. It was a perfect 61% retracement, and now we've backed off just a little bit, but we still haven't done very much. We haven't backed off very much at all. So this could be a real interesting move if it does start to go higher. But right now, the bias certainly looks lower, much like it does in the gold and the silver markets too, because those have also, rolled over to the downside and appear that they want to go, a lot lower, as do Treasury bonds. Remember, we talked about that. Let's put the gold up first, just to give you an idea of where we are here in the gold, because we hit that really important 78% level up there at 1280 last week, and then we backed off a quick $20, and we haven't bounced much. And so that's another reason to think that we've got a little bit more to go to the downside. But again, we're over this. We're over this lunar eclipse, and this could be enough to change everything. So we've got to be alert today for potential reversals in a lot of things. So the things have been going down, but most probably will reverse and go up. But the things that have been going up will probably reverse and go down. That's what it usually does, when you're watching some of these things unfold. Someone's asked a question: How would I rate this this potential top in the stock market that I see? Folks, it ranks right there with 2009. It really does. It's just the upside down version of what happened on March the 9th of 2009. The news is also there. That's why you've got the VIX index down so much. There are people saying, it's the stock market's overvalued. None of that stuff means anything, because when you look at a market, fear is a greater emotion than greed. That's why bottoms are easier to find than tops, because fear is a greater emotion than greed. You can actually see the physical characteristics of fear. You have you're sweating, you have your eyes wide, your fingers are white, all that stuff comes. So what I was saying, Mr. P, is that this is very similar to what happened in 2009, only just the opposite. That's what it looks like to me. And that's it. I will put that chart up to let you see it again, because it's that important. This was from the newsletter from 2009, and we'll bring it up here. And I said in that letter, this is going to be the biggest rally since 1938. Well, I was certainly wrong. It ended up being the biggest bull market ever, but it matched the one from 1929. But you can see the similarities between what's happening in the Bradley model and what's happening with the pattern are absolutely identical, folks. They really are. I mean, if you cut them out and turn them upside down, which I'm not able to do here, you would be able to see that without too much trouble. We'll put the other side of this up again because I think it's worth taking a look at it. So these are some of the things that we're looking at for today. So just pay attention. It's just a chart. Whether it means much or not, we have to wait and see. But we're seeing other sectors of the market are also, giving you ideas of what's going on. Now, we got an interesting chart from our good friend Jim Bartolioni of V50 Partners on Apple. This is a monthly chart going back to the IPO back in 1984, I believe, or no, it's 1982, I believe, was the I believe it was 1984 was the opening of Apple, as I recall. And as you can see, we're making a 3-drive pattern here, on the long-term monthly chart, much like we are in that long-term VIX index. So there's another one that looks interesting. And of course, Apple has been the darling of the stock market for a great deal of time. So we'll keep an eye on this as see what's going on as we watch some of these things unfold. We're going to have to take a little break here pretty soon, and then we're going to have Dale Pinkert from Forex Stop Hunters on, and we'll listen to what he has to say. So 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Dale Pinkert on the line. Dale, are you there?
Hi, Larry. Great to meet you.
Yeah, thanks for joining us. Hey, we've got a question from one of our listeners already. What does it mean, Forex stop hunters? I mean, do they flash stops in the Forex market? Is that what that refers to? That's what the question is.
I think they flash stops. I'm getting an echo here, Larry, but they have hunted stops since biblical times. Maybe there were buy stops when Joseph was accumulating wheat in biblical times. But you and I want to say, Larry, I've known about you and your great work for many years, going back to the 70s, and I was always interested. Larry Pesavento had a turning point date, et cetera, et cetera. But my Twitter handle, Forex Stop Hunter, is based upon what I saw as a runner on the floor at the Merc, the old Merc that was above Union Station. As a runner, I would walk out there with different orders, and if it had STP on it, the guys in the pit were very interested in those orders. There were blocks of stops. And when you were on the floor, a lot of people knew where the stops were. They were on paper in the deck, and say there were a bunch of buy stops. A lot of locals would buy the market, drive the market into the buy stops. You'd actually hear that we don't get to hear anymore. I miss it. An audible roar as stops were elected. And that normally turned out to be at least a short-term peak after the buy stops were elected, and people would sell into them, and, the public's gone, and then the break they were looking for happens, but without them. And I still believe that stop hunts happen in our modern age of trading. It's not done by locals. It's done by quants, black boxes. And I teach people, and it's very simple, to find out where the stops are. So you could do it like this. You just look at a chart and say, okay, I want to be long. Where would I put my stop? That's where everyone else's are.
I think you're right.
Yeah.
Well, listen, I posted your first chart, which I believe is the British pound versus the euro, as I recall.
Yeah,
and you want to talk about that?
Yeah, I use the metaphor, Larry. If you watch any singing competition, and people laugh at this analog that I'm using, but say, for example, American Idol. And you could have the best voice, the greatest voice, but your most important choice as a singer, and I'm an amateur, used to do a lot of karaoke, is your song choice. You could have the greatest voice, but if you don't pick the right song, your performance is going to be off. And for us as traders, it's not song choice, it's trade selection. That's our most important decision. So you could have a view on the dollar and be right about the directional move in the dollar and be in the wrong pair. So EG is one of the most liquid pairs out there. And I use it to trade, but I also use it for giving me an idea of what my preferred longs and shorts are going to be, Larry. So, you and I talked last week, and I was looking for one more push up in Euro Pound. So it made cable my preferred short. When it's trending up, your preferred short is cable, and your preferred long is Euro. So the pound actually broke the day before the euro broke on the NFP on Friday. So I use it for trade selection. So it's very easy, very fundamental. If you're bullish euro pound, you should be buying breaks in euro, selling rallies in pound. And I think we're very close to a near-term top where the euro may become the preferred short during what I think is going to be a correction only in the dollar, at least for now. And it's a very important pair to trade and for trade selection because I have a tendency, I don't know about you, Larry, I'm usually early, and I recognize things at times before the market does. And, it's basically you're shorting the relative weakness, you're buying the relative strength. It goes all the way back to, what they taught in Investors Business Daily decades ago. Remember, you buy the relative strength. So if you're early and yet your trade selection is good, I took a little heat on the short side of the pound, maybe 30, 40 pips, but if my trade selection was wrong and I said, well, the dollar's going up, I'm going to short the euro, you went through a much larger drawdown before the euro finally came back, and maybe weren't able to sustain your position until the break happened. So I'm a big believer in trade selections, everything in this business.
Okay, and we have two questions from our listeners. The first question comes from someone in Montana, and they're asking, how much do you usually risk on a Forex pair, or does it vary from pair to pair?
I think it varies more from trade to trade than pair to pair, although different pairs have different average trading ranges, and you can adjust. A lot of people use percentage of their account. They'll only risk 1% of their account. To me, those are money stops. To me, it's more important what's the contingency that's getting you into the trade. Maybe you have confluence of a few different methods that you use. Maybe you're at a fib level. For you, maybe it's a harmonic pattern that could stretch into this level or that level. So I believe more in market stops than in money stops. So it's going to vary from trade to trade. And, patterns are all the same. People say, well, Dale, I trade stocks, and you're an FX guy. You know what I say to them, Larry? I go, the only difference is the title on the chart.
Yeah, that's for sure.
And the leverage. I mean, the patterns are the same, aren't they?
Absolutely. I don't think there's any question about it. Now, we have another question from one of our listeners is, do you have a favorite, that you like to trade? I know you've already put in the euro pound and you've talked to the euro. Do you have others? Let's say if you had to pick your top 5 cross rates, what would they be?
Well, I like all the majors, and then I also like yen crosses. So I'm also a big believer, and a lot of people are portfolio type traders, Larry. I can't do it. It makes my head explode. I'm more, I'm rarely in more than 2 or 3 positions at a time, so I'm pretty concentrated. And especially new people that are learning to trade, I recommend they, Jack Schwager, I've interviewed him, Larry. I'm on both sides of the mic. He says, I said, Jack, what's the most important advice you could give to people? He said, find a trading style that suits your personality. Well, it's the same with instruments. Find instruments that you really have a rhythm for. You and I know from having been on the floor, knowing people on the floor, that there were guys that never left the cattle pit that were millionaires. They didn't have to be in hogs. They didn't have to trade euro dollars. They didn't have to trade currency or lumber or anything else. They knew one market like the back of their hand, and they knew every important technical level along the way. So I think there's a little bit too much enthusiasm for being diversified, overly diversified. In my mind, it only takes one and one at a time.
Yeah, I can remember the old days there at the Union Station there in Chicago on Jackson Street when the Merc was there. Those were fun times for me. I was there for 3 years and enjoyed it a lot. But things have changed now.
I have a funny story. It's not market related.
We got to pay some bills here. Stay with us. We'll be right back with Dale Pinkert of ForexStopHunters.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, with Dale Pinkert of ForexStopHunters.com. Dale, I've posted a chart of the euro versus the U.S. dollar. Would you like to run through that?
Okay, that's a weekly. Larry, I just would like to clarify Forex Stop Hunter is my Twitter handle, at Forex Stop Hunter on Twitter. And I host a free room from 9 a.m. to 10:30 a.m. Eastern Time at ForexAnalytics.com. So it's a free room. We have a great team. I believe in collaboration. But getting back to the euro chart, everyone could see that we had that major breakout at 115. I think it's a natural for it to potentially retrace close to it, maybe above it. And I'm viewing this as just a bounce in the dollar, at least for now. Some Elliottians would say this is going to be a wave 4 pullback before a wave 5 to the upside. I think that although the high in the euro from last week, I think is going to hold for a while, I do believe down the road, maybe into September, we'll be making new highs and see the 120 handle again, maybe up towards 123 ballpark. But in the meantime, maybe the catalyst is going to be inflation numbers that come out this week. Bond market looks pretty heavy to me. Looks like it could be vulnerable. And, you know, we've been waiting for inflation numbers forever that have never manifested for many years. Maybe this is the week that we get a pretty good hit to the downside in bonds, which could be the catalyst for fundamentalists to not want to be as bearish a dollar, at least for now.
Yeah. Do you remember the old days when the old M1 and M2 would come out and how the market would react?
Are you kidding me? Friday, and it was Friday afternoon, and it was my birthday one weekend. It was Memorial Day weekend, and I was short euro dollars. And I walked into my house, and I'm hearing Ron and Sana say, so how much higher do you think the bonds will come in on Monday? So that was one Memorial weekend, kind of put a damper on it for me and my birthday. But, yeah, it's amazing. Money supply means nothing. Everything's the NFP nowadays, right, Larry?
Yeah, and then they changed that at the end of the month, too. So it's just really related to what these charts can do. That's the main thing. We have one other question from one of our listeners is what is your average stop loss on, say, the euro versus the U.S. dollar when you're looking at it?
Okay, well, I like to piece into a position and piece out. In my younger days, because, you know, it happens every once in a while still where you hit something right on the button and you have no drawdown on the trade or very limited drawdown. But that's the exception, not the rule, I believe, for most traders, including myself. So I'm a believer in having a toe in the water, and if I still believe in the trade, adding on to the trade and building a position. But I say this, and I think the biggest mistake a lot of traders, especially FX traders, do is they use too much leverage. And I've even written a song about use less leverage. I think that if you want to be right for a week, you have to be able to be wrong for a day. If you can't be wrong for an average trading range of a day, I think it's unrealistic to think that you're a swing trader and you're going to be able, or for sure a position trader. But there are many entries you could find with a 100-point risk in euro.
Oh, sure. And I think that's a really good advice. If you can't stand the heat for one day, you probably shouldn't be in that trade for a longer period of time. Would be my guess.
No, in fact, you should close your account and put your money in T-bills or under your mattress. No. So, that's my belief, is that people don't give their trades breathing room, and they're trying to turn 10,000 into 100. And the best traders, Larry, they grind it out to try and make between 2% and 5% a month. They're not trying to hit home run balls. It's still baseball season. All the home run hitters in Major League history have also been the strikeout kings. The difference is here it's a one-mistake business, and if you strike out, you're not getting up to bat again. So, don't try and become a millionaire overnight. Everything takes time, even learning to trade, Larry. I interview hundreds of traders and, kind of like what you're doing with me right now. And, I think people have unrealistic expectations about how long it takes to make breakthroughs and have epiphanies and become a consistent trader. Why should it be any less time than an undergrad degree at a college, or a carpenter who starts off as an apprentice, then moves to journeyman before they're a master? And most of the people I talk to, it takes them 3-4 years.
Oh, minimum. That's a very good time frame. I think it's about of course, it's more valuable than a college education, so it should take as long as what I would think.
Yeah, but, good point. And, you can't learn experience, Larry. I have kind of a quote. It only happens with the passing of time and living through things. And, in our business, that's screen time. So, you can't speed up that process. And, just like being patient to wait for the right setup, like surfers don't try and catch every wave. They sit out there and wait for the right setup. You also have to be patient with yourself and give yourself time to, don't quit your day job. All right? That's what I tell people. And also, even the most successful traders, Larry, how about Rich Dennis? He was a legend, right?
Yep.
Well, you know what? He had another business, C&D Commodities.
Yep.
So it's always good to have another revenue stream, because even the greats have drawdowns.
Yep, there's no question about that. Now, where are you located these days? You're not in Chicago anymore, are you?
No, I live in Temecula, California. I've been out west, in the San Diego area for about 20 years now.
That's the Bing cherry capital of California.
Yeah, you told me you used to come and pick those things and have stomach aches on the way home with your family.
Yeah, my daughters used to pick them by the pound. There were baskets of them. Anyway, how would the folks reach you if they wanted to, take a look at what you're doing and stuff? You want to give us some information on, the best way to the folks to reach you? Is there a website that they can go to?
Yeah, they could go to www.forexanalytics, and the analytics is spelled ANALYTIX.com. Okay. I work with, it's interesting, Larry, I've facilitated live rooms with prop traders, retail traders, etc., and always believed in social trading. But I now work with a team where we have a guy who specializes in Elliott, a great trader who does your stuff, harmonics, and then we have guys like Blake Morrill who does conventional. So we kind of have a mastermind within our team. So, depending upon what your poison is and what kind of methodology you use, you could find it all there. at forexanalytics.com.
Okay. Well, listen, we want to thank you for being on the show. We'll have you on again, and if you do see something that you'd like to, share with us, get in touch with me, and we'll try to figure out a time where you might come on and, share it, because you've got a lot of great experience, especially about the psychological part of the business and how long it takes to be successful and some of the things that are necessary to go through in order to be successful. So thanks for joining us, folks. We appreciate it. Thanks,
Larry,
Dale.
It's been an honor.
You bet.
Bye-bye.
We'll see you again soon. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted a chart from our good friend Arch Crawford showing the new highs and lows. As you can see, there's a huge divergence here. The market has not shown a big explosive move to the upside like we've seen in the Dow. Whether this means anything or not, folks, I want to just give you a little bit of caveat emptor, buyer beware. I have a very strong opinion here, but opinions can get you in trouble. So pay very close attention to this next sentence. You have to be responsible for what you're doing. I believe, like I said in the letter, if we get a move down of 150 points in the Dow today or tomorrow, that's going to be the start of it. Until that happens, it's probably going to continue to maybe move a little bit higher, but we'll wait and see. This has got all the factors that we had set up like March 9th, 2009. Whether it'll do the exact opposite like it did then, we'll let history decide it. But that's what I see, so I have to put that in there, and we'll see what happens. So it's very important to really keep a very, very close eye on these markets at all times, and always be protecting yourself with some good stop protection. Someone's asked a question about the gold market, folks. I don't believe gold's going to go higher on a long-term basis until we clear 1285. And if we do that, and we're only $25 away from that, so we could easily, make that this week. So if it does that, then I will have to, switch over to the bullish side of gold. But right now, I still think gold is heading, to the downside. We dropped, a quick $20-some right after the news announcement on farm payrolls on Friday, and we've only been able to rally back $4. That's not a very bullish sign, folks. That's an actual definition of a dead cat bounce. So those are the ones that you want to pay, really close attention to. Tomorrow we're going to have Ed Carlson of the Seattle Market Technicians on. He's the fellow who's done a lot of work with George Lindsay's work, so that'll always be fun. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.